Hello and welcome back to our series on what is the stock market. This time we are talking about the wins of the market. What happened when? A brief history of the market. Now, if I were my daughter and 9, boy would I not want to watch this video. She is not into history or markets, so this would really be pretty dry. So I've tried to write this in a way that's short, sweet, we cover the high points, and we move on. Okay, I personally find this sort of thing kind of interesting when it has to do with the markets. Not so much when we're talking like Mesopotamia, but stock markets, I find it interesting. So let's talk about how the market began. All right, the first sort of official markets, as you were, was actually the Amsterdam Stock Exchange. Okay, there was a company called the Dutch East India Company, and they had to sail some boats. They had to go places, and they didn't have a whole lot of money to sail those boats because it cost money to sail those boats. So what did they do? They said, "Hey, y'all, give us your money, and we will give you a little piece of this boat here." All right, sort of the metaphorical plank out of the galley or something. I don't know any boat terms. I suppose I should call it a ship. I don't know any ship terms. But you could finance one of these voyages from the Dutch East India Company, and you could buy shares. They issued shares to the public to finance those voyages. That was the first stock exchange. People would, could trade those shares back and forth in the 1600s, I believe. All right, other markets sort of came and went along the way, and then the other big one these days is Wall Street, which was actually named for a wall, believe it or not. It was a wall that the Dutch settlers built to keep out people from New Jersey. No, I'm not sure who. It kept out somebody. It was a defensive wall that the Dutch built to keep out someone, and that was named Wall Street. So there you go. And again, other exchanges in between, but those were kind of the two big benchmarks. As you're looking at market history, what you will find though is crashes, booms, and busts. All right. Notable stock market crashes: the tulip bulb mania. This is a big one we have to know about. It was a big speculative bubble in the Netherlands, and basically everyone lost their minds and decided that tulip bulbs were the most valuable thing in like the whole world. Okay, this is sort of the Bitcoin of the 1600s. I mean, people were paying just ridiculous amounts of money for a tulip bulb, which is really silly. You can have a tulip bulb and plant it. It turns into a pretty tulip, but then it dies. It doesn't even like hold value or anything like that. I don't know. Maybe it makes more tulips. My botany professor in college would be upset with me for not knowing that. He'd probably be more upset with me for lying about the fact that I had a botany professor in college. The next big crash, the next notable crash here was the Wall Street crash of 1929. It triggered the Great Depression. Bad news bears. A couple other notable ones here. We had Black Monday. That was in 1987. That was the biggest one-day decline in the Dow ever. So prices declined, and as did stockbrokers, declined right out of their windows. Kind of a morbid picture, but it was true. That's what happened. Another couple of bubbles here. We had the dot-com bubble, which of course burst. The financial crisis in 2008, and also you had the COVID-19 crash in 2020. All those were pretty severe crashes. This is not correction territory where we're down 5, 10%. We're down 40, 50, 60, 80% in some of these. So very big crashes. You had the booms though on the other side. You had the Roaring Twenties. That was the big period of economic prosperity before the Great Depression, right before that 1929 crash. Things were rocking and rolling. And then after World War II, things picked up pretty significantly, and you had strong growth across the board. You also had the big dot-com boom in the 90s. It was the 1990s, in case you're watching this in like 80 years from now. There's also the housing market boom. That one really wasn't a market per se, or not a stock market thing per se. It was more of a housing market type situation. And then the big bull market from 2009 to 2020, 11-year bull market, longest bull market in history after that 2008 crisis. But lots of booms, lots of busts. We're going to talk technological advances here in just a moment. But yeah, major events. Markets can get extremely volatile. So again, on these big bull market runs, you might see 100%, 200% run. In a crash, you might see 80% crashes. One thing that is worth noting, worth pointing out as you're learning about markets, a 50% crash and a 50% recovery do not equal 100%. They don't get you back to break even. If you have a 50% crash, you're now sitting at 50%. If you have a 100% recovery, that takes you back to even. If you have a 50% recovery, that takes you to 25% down. So be sure you're aware of the way percentages work. All right, minus 50% plus 50% does not equal 0. It equals minus 25%. Likewise, plus 50% and minus 50% is minus 25%. It's odd, but you need to be aware of it, okay, if you're going to be trading. Last things last, on the history of the markets front here, we have global markets. The evolution of global markets puts even more participants in our markets here in the US, and obviously overseas markets as well. And if we have more participants, then we have more volume and we have more liquidity, which creates more efficient and liquid markets. So global market's good. The more players we have in the market, generally speaking, the better things are. All right, that's a brief history of the markets. And in our next video, we will talk about the trading hours, the hours that those markets are open. All right, thanks for tuning in. We'll see you next time. Take care.